how much capital is truly needed to trade options? You'll hear people talk about, starting with a couple $100. The problem with that approach, number one, you're going to be limited in what strategies you can use. You're going to be limited in the products that you can trade. And it's really not stacking the deck in your favor. Most brokers, in order to access a margin account, most brokers have a minimum starting account size of between $3,000 and $5,000. I recommend a $3,500 account size to start with. You could start with less than that, but if you do, it's just much more difficult to control your risk. You start out with a $500 account or a $1,000 account, one losing trade has a pretty big impact on your account. You may not be able to take trades beyond that one loss, depending on the type of position that you put on. The key to successful trading long-term is to be able to take a large number of small trades and get your sample set of trades big enough. Over time, you can get the numbers to work in your favor. Even though you're going to have winners, losers, and break-evens along the way, if you start out with too little of an account size, you're going to have it more difficult. You're going to have a more difficult time getting the numbers in your favor. Okay, so $3,500 is what we recommend that you start with. You really want to have that account size where you can keep your risk between 2 and 5% of your account per trade. You never want to get into that scenario where you've got 50% of your account in 1 or 2 positions. I mean, it's such a dangerous position to be in. You might have a system that wins 70% of the time. Even with a 70% win rate, it is still statistically possible to have a losing streak of 4 or 5 trades in a row. With a small account size, if you're not careful, a couple of losing trades, you're crippling your account, when in reality, the numbers are still very good long-term. If you're not able to stick around long enough to get those numbers in your favor, that's the hang up for a lot of people. So we want you to start out $3,500 at a minimum. Ideally, if we can have that account size where you can keep that risk between 2 and 5% of your account, that's ideal. Now, there's 2 main types of accounts. Yes, you can get into retirement accounts and other types of accounts. That's a topic for another day. I want to talk about the 2 main account types that most options traders use. You've got your margin account, you've got your cash account. Let's talk about the margin account first. The margin account, a lot of times people, they get intimidated by it because they think that they can lose more than what is in your account. The key to remember with an options trading approach, we're not using the margin to trade off of, but it is required if you want to use the vertical spreads, and you absolutely want to have vertical spreads in your arsenal. So the margin account will open up a wider range of strategies to you, but the margin account is subject to the pattern day trading rules. And what that means, going back to the financial crisis years ago, they implemented some additional safeguards for retail traders. I don't agree with this one. I don't like it, but I have no control over it. And what it states, it tells you can't take more than 3 day trades in a 5-day stretch. Day trade is classified as a trade that is open and closed that same day. They give you 3 in a 5-day stretch before they cut you off. I don't like how that limits you. They give you a little bit of a cushion there just in case you do have the occasional day trade. The pattern day trading rule is there for any account size under $25,000. So it's not a deal breaker. It's not, it's not a huge drawback. It's just something you have to be aware of. You have to know that it is there for an account size less than $25,000. The cash account, on the other hand, is not subject to the pattern day trading rules. You can take as many trades as you want in a given session as long as you have the capital in your account. The problem there is the cash account is limited to long calls and long puts only. You're just going to limit yourself in the flexibility that you have. Ideally, I would love to have people open up a margin account to start with. That's going to give you the most flexibility with the strategies that you use. In this type of a market where we've seen some extreme volatility, probably a good idea to also open up a cash account. Just to have it there. We've had a lot of day trades the last month or so with the market so active. Opening up that cash account, if you're using Thinkorswim, let me pull mine up right now. Up at the top, you will see that I've got my account up in the upper left-hand corner of my platform. If I click on that drop-down menu, you'll see that I've got 2 different accounts here. I've got a margin account and I've got a cash account. And I can flip back and forth between the two throughout the day if I need to. You can link your accounts. You can do this in many other broker platforms out there as well. So if you run into that pattern day trading rule, you can flip back and forth between your accounts. With TD Ameritrade, you can log into their website and move money between the accounts as well. So let's just say you've got $25,000 in your margin account and you want to move 5,000 of that to your cash account midday. You can do that. Just log into their website, make the internal transfer, and those funds are available immediately. You don't have to wait, day or two to move those funds. So it can really give you a lot of flexibility. And the minimum account size for most brokers on the cash account, you're talking about, I believe with TD Ameritrade, I want to say it's just it's either $50 or $100. It's a very minimal account size required to open that up. So again, love to have you with a margin account to start with. That's the ideal choice, but also probably not a bad idea long-term to also open up a cash account.